Good evening, ladies and gentlemen. Thank you for joining Alliance Bank's Income Protection for Your Loved Ones webinar. My name is Sean, and I'll be your MC for today's webinar. Thank you very much for taking time out to be here with us today. First of all, I would like to highlight to you, if you have any question during the presentation, just type them through the Q&A live event message box, which is a box with a sign of question mark on the upper right of your screen. We will address the questions at the end of the presentation, hence do not be concerned that your questions are not addressed during the presentation. Okay, let's begin. Our today's webinar speaker is Miss Angela Tan. Angela graduated with Association of Business Executive UK and has almost 20 years experience in the wealth management business. She has been with Alliance Bank for more than 2 years and is now leading the nationwide bancassurance sales of the bank. She's a Penang lady, and prior to joining Alliance Bank, she was leading a branch and being a wealth coach heading Northern region in foreign banks. She has vast experience in assisting you in terms of your wealth and protection planning. Thus, feel free to raise any question to her to exchanging thoughts of the topic to enhance each other's knowledge in the webinar. Enjoy the session with Angela. Without further ado, Angela, I now hand it over to you.
Thanks, Sean, for the introduction. A very good evening to all of you. Thanks for making time for this webinar, and I hope every one of you is keeping safe. Without further ado, let's start with the topic today on income protection for your loved ones. While many of you do agree that, our life expectancy has increased these years, the data actually proves that we are right. More and more people are having exceptional longevity due to many factors. It is common now where you can hear people saying, hey, guess what? My granny is 102 years old and my grandpa is already 105 years old. So what contributes to the longer life expectancy? Let's just have a look. Life expectancy can be prolonged by changing our lifestyles. We choose more quality ways to enhance it. We do yearly checkups, exercise regularly, eat quality diets and vitamins, and all these on the slides has a positive effect on overall lifestyle of ours. If each and every member of our family members practices this kind of lifestyle, we can surely maintain a fulfilled, happy family, just like this photo that I'm going to show you now. Isn't this a very lovely photo? It is a 3 generations family living happily and comfortably. Nowadays, both the husband and wife working to support the family is common. Hence, they are regarded as the main pillars of the family. So, as breadwinners, they will provide shelter, food, clothes, feed the bills, give love to their children, and etc. But, as all of you are aware, sometimes mishaps happen, and it will interrupt the normal happily living style of a family. If suddenly, one of the pillars lost his or her job, it is still temporary because there are still another pillar supporting. But what if both are retrenched? And worst scenario, what if death occurs to one of the pillars? The earlier happy...
Sorry to interrupt, Angela.
Yes. Yes.
I think the audience is not able to see your slide, so maybe you want to share your slide.
Oh, is it? Okay, let me just try again.
Sure.
So we'll continue with slide 6.
The slide is not up yet. Maybe you want to project it first, then only you share. Sorry, ladies and gentlemen, I think a little bit of a technical issue.
Can you guys see my slides?
No. Did you share it?
Yep, I did. Wait, let me just try again. Wait, let me just try again. Can you guys see?
Yes.
Okay. Hold on, yeah. Okay, so where did I stop? Okay. Okay, nowadays, both the husband and wife working to support the family is common. Hence, they are actually the main pillars of the family, of course. So as the breadwinner of the family, they will provide shelter, food, clothes, they feed the bills, give love to the children, and etc. But as all of you are aware, sometimes mishaps happen, and it will interrupt the normal living style of a family. If one of the pillars lost their job, it is still temporary because there are still another pillar supporting. But what if both are retrenched? And worst scenario, what if death occurs to one of the pillars? The earlier happy, perfect family pic, which you have just witnessed in my earlier slide, will be affected for sure. With the rising cost of living and other factors, things change and the loved ones will have to carry the burden of the pillar and need to adapt to the drastic change. Well, don't you think it will be less impactful if we have a temporary pillar to provide the support of the lost pillar? Assuming both pillars fall at the same time, then the real disaster starts. The children will be badly affected both financially and emotionally. Most of the worries normally lies in terms of monetary, such as daily expenses like food, education fees, not forgetting the most hurtful part, the upbringing of the child without a parent or worst scenario, parents. Let me just share with you. So this is what normally happens when somebody passed on. With or without a will, their assets like houses, cars, jewelries, and cash will be frozen. All assets of a deceased will be frozen during the estate administration process. And the beneficiaries will only receive their shares after all liabilities had been paid off. Well, if your loved ones have loads of spare cash, then it will definitely be a blessing. The most important thing is the common family expenses like education fees, food, medical fees, if any, or any legal expenses incurred during the estate administration will be taken care of. But what if they don't have the spare cash? Obviously, we cannot tell our body, hey, can you stop eating for 1-2 days, or not to fall sick, or even stop paying utility bills, right? This is definitely something we do not want it to happen in our lives, but sometimes, uncertainties happen and we cannot control our destiny. More so lately with the massive increasing number in cases of COVID-19. Well, some of you might not be aware that, what I will be sharing, but let me just run through some interesting facts which I've gathered from the epidemic that we are currently facing. I hope many of you has already shifted the mindset of the statement, yeah? If you still have the mindset that only the elderly or those with medical conditions will go to heaven, then I'm really, really sorry. I might need to prove you wrong. Why? Let me show you some facts. While we are still having the thought that our life expectancy should be on the uptrend during the 21st century, because we kept saying, we do, exercise every day, we eat better food, but sad to say, it's no longer like that. COVID-19 can just prove us wrong anytime during this epidemic. As shown in the slide, this is how fast the virus actually attacks and affects our lifestyle today. 1 out of 28 people are affected and 5 passed away in every hour. Isn't this scary? This stat was actually updated till 2nd of August and not forgetting today's new high of 24,599 cases. All right? So like what I've just mentioned, those who are completely healthy doesn't mean mishaps won't happen to that group of people. Risk is everywhere nowadays in the community. You still go out, tapao, go market, buy veggie, online shopping. Oh yeah, why online shopping? When the parcel arrives, happily you will receive the parcel and open it. Then after that, you forgot to wash your hands. You touch your face, you touch your eyes and whatsoever. What if the person who passed you the parcel is infected? Now also quite scared, huh? Okay. So what do you mean by the word comorbid in this slide? Okay, comorbid relates to diseases or medical conditions that are present in a patient. In layman's term, it is called underlying medical conditions. So as shown in the slide, on average, 1 out of 7 who died from COVID-19 this year did not have reported or diagnosed comorbidities. Now, we look at the age group. The highest proportion of COVID-19 deaths without comorbidities was among those aged 15 to 24, followed by 24 to 44 and 45 to 54 age group respectively. In short, 2 out of 21 people who died from COVID-19 in the age group of 25 to 54 this year also did not have reported or diagnosed comorbidities. While some patients are lucky enough to be treated in the quarantine center or even hospitals, some unlucky ones are actually brought in death. What do you mean by brought in death? No time to even bid goodbyes to their loved ones. Well, just like us, we will still go to work every day. Then all of a sudden, pengsan at the workplace. Or worse still, when walking towards their car, pengsan on the road. Actually, this happens. This is no longer something very strange to us. It's really sad, right? So, life is indeed more fragile and uncertain with COVID-19 in the community these days. So guys, live with the motto, YOLO. You only live once. Eat what you want to eat, do what you want to do, and whatsoever. Now, for those who are asymptomatic, meaning to say they kena, but they don't know because they don't have any symptoms, many are required to only quarantine at home. What if the person is staying alone and suddenly having acute symptoms? If anything happens, nobody knows, right? Okay, let me just show you this. Of course, these articles are published much earlier before the pandemic era, but it kind of explains why so much money are trapped since the earlier days. This is mainly due to unplanned preparation or a sudden pass on of someone. Of course, none of us wants this, but the fact is, no one knows when they are bidding goodbyes to their loved ones. Everyone will have plans, be it short-term, medium-term, or long-term. And the thing with human beings, we always think that we have the time. Hiya, no need to so kanjong, you know, no worry, no hurry. But sometimes with this kind of attitude, these thoughts can only be a plan. And a plan will only remain as a dream. And it will be like how I wished. So when mishaps happen, when things are unprepared and unplanned, complications starts to surface like the articles shown. Another interesting fact indeed, the unclaimed money in Malaysia has ballooned to ringgit Malaysia 8.8 billion in 2019, which actually constitutes to an increase of 60% in 3 years' time. So for those who has done a comprehensive will, kudos to you. But those who are still thinking of starting one or having another solution to the challenges shared earlier, the bank certainly can help you making choices. And I will share with you how estate distribution works in a simple way. The common three main assets as shown in the slide is normally to be included in the will are cash, non-cash estate, and business. And okay, for those with will, if the will is smooth and if it's not contested, the contested word here meaning if it's not challenged, it can be dispersed as fast as 6 months to 2 years. Quite fast, huh? Well, actually, I'm not the exact person whom you can really refer this piece in depth, but this is some generic info that I can actually share with you guys tonight. Once a testator passed on, all his assets will be frozen and the loved ones will need to list down all his assets and liabilities available for filing purpose, then subsequently appoint a lawyer to file for probate application. After that, they will need to outline the current assets and liabilities with all transactions recorded. The issuance of the final probate will only take place after ensuring all assets being distributed after deducting all expenses before the beneficiaries can get the proceeds. Quite tedious and long of a process, huh? But don't be surprised. I've came across clients telling me his late dad could not remember all the assets he had before he said goodbye. Or in some cases, they had more debts than assets, meaning to say their net worth is actually in a negative sign. Anyway, one will also need a personnel to run for all this to ensure the proceeds can be expedited. Normal days already quite susah when you do not know the process and then it is quite lengthy also. What more to say during this pandemic era? Law office closed during MCO. Government offices will be closed. Here closed, there closed. So it will definitely lengthen the whole process for sure. Let's just see what if you have an issue with the will. Challenges like unable to locate assets and liabilities for filing purpose. Cannot locate the will, don't know phong bin dou you know. Unable to locate witness, witness executors, where are the executors when, something happens? These are all emergency, moments. Some with possible lawsuits may arise from any parties and some with complicated processes to liquidize the assets in terms of sourcing beneficiaries. All these takes time before the proceeds can be distributed to the loved ones. Hence, sometimes you can hear stories saying like, their will takes more than 2 years or takes more than decades and whatsoever. So this is actually true. Hey, come. What if there is no will? If a person dies without a will, his estate will be distributed based on what the government has set out in the Distribution Act of 1958, where all debts and expenses being paid off. They have to make sure that, they deduct everything before the loved ones can actually get the proceeds. So the table on the slide actually shows how it works and it's quite straightforward, I would say. So I will just take one example, which is the last one. Okay, assuming there is a surviving spouse, children and parents, the percentages will be like spouse a quarter. Issue over here relates to children, yeah. So issue being the children getting the half and the surviving parents will get the quarter. Okay, so we can all agree that, with or without a will, it will take time before the assets can be distributed to our loved ones. There is indeed another method for your loved ones to receive proceeds in a faster way. There you are. This is actually the answer. It is via the EPF. The EPF allows you to appoint beneficiaries, and the claim payout can be as fast as 2 weeks to a month if you are lucky. Okay, so more often than not, EPF will be regarded as part of your retirement savings. Sorry. Okay, so it can actually indeed be an avenue for your loved ones if the person who actually bids goodbye is under employment with an EPF fund. It can be liquidated quite swiftly, but the question here now is, will it be sufficient for your loved ones to live comfortably? Actually, EPF has suggested that, the minimum savings that an EPF contributor should have at the age of 55 minimum is 228,000. What's startling is that only 18% of the contributors have that amount. And with the 228,000, this actually equates to only a monthly withdrawal of 950 ringgit to cover basic needs for 20 years. 1 month of 950 ringgit. No need calculator, so you all know whether it's sufficient or not, right? Because I also believe that majority who actually contributes to EPF nowadays, many already ventured to second or even the third retirement or emergency fund via other saving solutions. As I think all of you agrees that with only EPF account, it is really insufficient to retire comfortably. For those without EPF, unless the loved ones have plenty of spare cash to serve as emergency, else it would be a burden to them. You might want to venture into other saving solutions as part of your plan. At least save a bit monthly to provide you a safety net if you do not contribute to an EPF. With the pandemic era again, with all the suggested bantuan plan from the government, case in point shown here in the slide, ICNR. Many has withdrew part of their EPF fund, and the stats shows that 54% from the 14.6 million EPF members have now less than 50,000 in their retirement savings. That should, if anything were to happen, it falls back to the question we ask ourselves again and again and again. The balance of my EPF fund now is sufficient for us to survive how many years during our retirement? Will it be 5 years, 3 years, or only 1 year? And another hot topic everyone knows. No one can deny that Malaysia is seeing a rise in cost of medical insurance. Why? Simple. This is due to the rise of medical costs. With Malaysia being one of the countries promoting medical tourism, the medical costs will keep on increasing year by year. This is definitely a concern for those doing planning, especially for their golden years. So you can see from the claims payout in Manulife Insurance Berhad last year. Medical is indeed the highest claim ratio among all claim types. The total medical claim last year was about 75.1 million, and it is a whopping 76% out of their 100% claim ratio. Dahsyat, right? So this is actually the fact. Okay, but not to worry. Let me share with you a piece of good news today. With the current environment, we want to continue to ensure that we take care of you and your family. Manulife Insurance Berhad now will reimburse the medical expenses if one is hospitalized in private hospitals in Malaysia for COVID-19 clinical stage of 3, 4, and 5 treatments. And guess what? This is open for both existing and new clients. This will definitely help giving you better peace of mind. Let's see another interesting fact. For you guys who has young children, let me ask you a question. Do you think it's cheap to raise one nowadays? Everything is so expensive. And based on 2018 Malaysian data, just a very basic living and a very basic education in Malaysia, for a child from nursery all the way to local university will actually needs a total of roughly 1.4 million ringgit Malaysia. Where higher education cost is concerned, the N40 and B40 household groups are largely affected. Even with the median household monthly income of more than 6,000 for the N40 group, the current cost of private education is worrisome. As a result, many parents will have to take, cost-effective measures to ensure their children are able to pursue their tertiary education and, most importantly, studying their preferred course. Well, education is not just about only pure education. What about their extracurricular activities like piano lessons, violin lessons, tennis, swimming, ballet, and the list goes on and on. What about boarding school? If you have decided that, okay, I want to let my child go overseas. So there are a lot of auxiliary costs, not just the cost of real education we need to think about now. There are many building blocks along the way in a child's life stages. So back to the real education cost, very much depending on what course your child is studying and which university you intend to send your children to. Of course, if you plan to send your children to other parts of the world, then the above slide is a rough guide of expenses that roughly how much you actually need. So with education inflation coupled into, education costs will only be getting higher yearly. But with yearly or early planning, monetary angle will be less burdening for sure. And a lot of people will have this worry. But should anything were to happen in between, if you have a solution like, savings, touch wood lah, if one of the parent were to pass on, actually, no worries. We have solutions for you to ensure that your child's education and future is protected. With all the facts shared in a moment ago, let me just do a quick recap on some pointers that you might want to actually take note on. Easier lah. Okay, life expectancy has indeed increased. We are going to live longer, but do we have the sufficient fund to live longer? Pandemic has certainly changed the world, and many left to heaven without proper planning. We see the impact of not having proper planning. The impact of intestacy, meaning go to heaven without a will. The emotional pain and losses it has caused to our loved ones can be both taxing and unbearable. The reducing savings of our EPF account. Even with EPF, the question now is, will it be sufficient? But now with the reduction in EPF via early withdrawal, can we still imagine that the balance left in the account during our retirement days will still be sufficient for us to live comfortably during our retirement days? The hike of medical costs and insurance premium. As much as we do a lot of exercises every day, we eat healthily, as much as we love to stay healthier, can we guarantee that we cannot fall sick? And lastly, the rising cost of education and education inflation. With all that's going on, can we neglect our children's education? I'm sure this is something we need to give a serious thought to it. Don't you agree? So, ladies and gentlemen, having a plan B is no longer an option. Insurance may not be your plan A, but it certainly can be your plan B. Let me share with you how it can be helpful to you. So, what can the bank offer you today? Not a fixed rule, but it's just a gauge. You can set aside only 1/3 of your assets in cash to act as second will via our suggested solution, whilst your first will still going on. It will be including, many of your big stuff like your houses, your Ferraris, your cars, jewelries, and whatsoever. And this solution that we are offering has 4 main benefits which you should be looking at. First thing being the liquidity. This refers to how easily your loved ones can get cash if something happens. Unlike a smooth will, which will also need roughly about 6 months for the proceeds to reach the loved ones, right? With this solution, it takes only 2 to 4 weeks latest. During time of uncertainties, the cash will always be the most important to have. This solution is also creditor proof, meaning to say, if a person is a sole proprietor and he passed on, if you are the beneficiary of a life insurance policy, that money belongs to you. The deceased creditors cannot force you to pay it to his debts. With this, it provides peace of mind, ensuring the legacy smoothly reaches to the beneficiaries. Unlike maintaining a will, this solution is also more cost efficient. Why? Maintaining a will sometimes can be quite costly. The cost needed from the beginning till the end of the proceeds, until the proceeds are distributed. Along the way, probate application, you need money. If the will is contested, costs arising from lawsuit will be there. You need to hire a lawyer. You need the top lawyer. You need more money. To transfer properties, you also need money. In short, it is cheaper to maintain a policy as you won't be charged anything that I've touched on. Let me just tell you a recent story that, a client of mine actually, cerita me lah. He was infected in stage 3 and he wanted to rework on his will and planning. So guess what? The process was like so stringent. Apart from requiring the presence of at least 2 witnesses, which is actually the testator, and the medical professional needs to be there because he was actually quarantined. He also needs to obtain permission from the authorities that as it is not permissible for wills to be signed via electronic means. So in short, making a will or changing it in such a situation can be precarious as these wills can be contested anytime. So it is quite true. There will be very, a lot of loopholes in between, the processes. So if it is contested, the cost mentioned earlier will need to be taken into consideration. So with the pandemic crisis affecting the overall economy health, the government might have to impose extraordinary measures as it is being pressured into taking proactive tax measures such as, the reintroduction of the inheritance tax, which was abolished in 1991. I think many of you heard that. But as for now, all personal life insurance still gives you the ability to transfer a policy's death benefits tax-free to their beneficiaries. No matter how big the death benefit is, be it 50,000, 50 million, the beneficiaries won't be paying a single cent of income tax on the money they are getting. Okay, so while waiting for your first will to be distributed, now at least you can have some cash liquidated from your second will. This is to attend to your daily expenses like, expenses incurred during the will administration, which can be costly and time-consuming. So what if the will do have complications? So by having some fast cash can at least be not so burdening to your loved ones. Daily life expenses are covered temporarily at least. This will help to put food on the table, daily expenses, and one thing most of us forget is our assets installment, which is to ensure that having a roof on our head is still maintained. So in summary, solutions like wealth creation, accumulation, and also distribution are what we are looking at a product solution nowadays. Disciplined savings is like forced savings. The idea behind forced savings is like, it's hard to save money. But a lot of us will definitely feel guilty about spending too much. And the funny thing is, we continue to spend and we continue not to save enough. So what's the solution towards this kind of challenge? You can actually put aside a money for a plan of like 15 to 20 years, and then at that point you'll have an asset you can play around with to use the fund for your retirement, kids education, or even your kids' first car or first house down payment. And as the pandemic has wreaked havoc on financial markets globally, it is also prudent for you now to restructure and rebalance the risk of the level that you are more comfortable with. Having this solution in your financial portfolio diversification can further protect your capital these days. Other than that, it provides you potential higher returns than the current low interest rate environment. As for those who are interested in venturing into solutions for retirement purposes, where you totally agree that one EPF is a challenge, one might not be enough, so what do? You create more. Very much depending on your risk appetite or risk profile, you can either do a savings with some excitement, which is inclusive of investment element, or purely without any investment element at all if you are very, very, very conservative. Again, very much depending on your risk appetite. And if you are the sole breadwinner of a family, then you will definitely agree that legacy planning is your top priority for your own peace of mind. I believe many of you might have a plan to leave a legacy for your children. But for example, you want to save 1 million for your 2 children, each 1 million. Many will think that he or she, needs to put aside 2 million for that plan. Let me just enlighten you. You actually do not have to, yeah. Depending on one's age, maybe a client at about maybe 40-ish, he or she can only use roughly about 500,000 to exchange a 2 million coverage, touch wood, if anything were to happen to him or her. Just put aside 500,000 and be rest assured that if anything were to happen, the children, each of them will be getting the gift of 1 million each. And the most happiest thing is that now he or she can have a balance of 1.5 million for himself or herself to actually spend it, or have, like a shopping spree and whatsoever. So it is quite wonderful, rather than putting 2 mil inside in an FD and, touch anything were to happen. It's just a one-to-one kind of thing. We can actually have multiplier effect on all this. So if the person save already, one day at about 80 years old, he said, "Hiya, my kids are all well-to-do and I wish to U-turn." U-turn meaning he wants to keep the cash himself or herself. It can be done. He or she will just take back whatever he saved on you. So ladies and gentlemen, this is indeed a very, very flexible solution which you can actually look into. In a nutshell, different people will have different concerns and different needs. So no amount is the right or ideal amount, as different individuals need different coverages and they have different goals. Hence, we have an array of wide-ranging solutions from protection all the way to savings. All these solutions will have different features and benefits to cater to your various needs. We have solutions to cater to multiplier effect of 10 times depending on the entry age. In layman's term, you use 1 ringgit to exchange for 10 ringgit. We even have crediting rate as high as 5.18 per year. Crediting rate meaning it's like a payout based on the company's performance. So the best thing here is, unlike investment performance, where you sometimes have positive returns, sometimes you will have negative returns. The crediting rate that we offer will not go below zero, meaning if that year itself the company did not make any profit or is suffering losses, your accumulated cash value in your tabung, which is your savings, will not be affected. So these are actually some solutions for you, ladies and gentlemen, tonight to actually ponder on. Well, feel free to talk to us anytime if you want to find out more. As if you fall into the first 50 clients of, who actually speaks to us after this webinar, you will walk away with Grab vouchers. Thanks, and back to you, Sean.
Okay, Angela, thanks for sharing for such an important topic, and I'm sure that it affects all of our audiences here as an individual, and it is very indeed informative as well. At my end, I have I think 2 or 3 questions posted by our audiences. So I'll just read it out so that you will be able to address some of their concerns, right? The first question goes like that. This client is asking that I already have couple of insurance plan that I bought quite many years ago. So do I need to upgrade my plan?
Okay, well, to be fair, it is important that you review your insurance every few years, as you would have different needs as you progress in life. So over the years, you may have gotten married, have child, started a family. So part of all this, right, it affects your review process, as you need to consider how you want to protect the hopes and also the dreams for your loved ones should be unthinkable happens to you. So if let's say you have purchased, a medical insurance many years ago, you should be looking at it because you know why? You review your plan to ensure that you are adequately covered today. Rapid advances in medical technology nowadays have produced an array of new treatments and also medicines. So the downside of it is that the cost of diagnosis and treatment can be very, very expensive. So you need to ensure that your coverage also have that amount so that it is sufficient for you to keep the pace with the cost of treatments available currently. Yeah. So this is actually what I think of lah. Yeah.
Okay. So the next question goes like this. Why do I need a medical coverage when I get it free from government hospitals?
Okay, many actually have this thought. Malaysia has one of the best public healthcare systems in the world. Don't laugh, but it is the fact. However, there is still a misconception that everything is dispensed at no cost. You're wrong. Implants, stents, or even eye lenses and certain chemotherapy drugs must be paid by the patient. So although it comes at a discounted rate, it's cheaper, it can still be costly if you have prolonged illnesses like, cancer. It is best that you consider buying insurance to ease your financial burden during unforeseen circumstances. If you do not want to, if really, really something happens and you do not have the money, then are you going to ask your friends or whatsoever for help? So I think it's good to have one by yourself rather than, waiting for the government to save you.
Okay. The other question is this. I think it's pretty general. What kind of plan is suitable for me?
Okay. Honestly, again, different people will have different needs. So I cannot tell you straight away, hey, you need this plan, you need this plan. The right plan actually depends on your financial objectives and also your affordability. You can select plans that, provide protection or protection with savings, or opt for investment-linked insurance, if let's say you are very gung-ho, you want to have, you know, some investment elements into your financial portfolio. So apart from offering protection, investment-linked policies can let you choose how you want to invest in stocks and shares based on your preference. But of course, it will be via unit trust kind of way. So it will be somehow less risky. Anyway, our bank does provide, you know, free of charge services to go through with you. If let's say you want to identify your needs, or subsequently, you know, ask us to like provide a tailor-made solution that best suits you, you can come to us. You can look for our relationship manager anytime, or even the financial services consultant to help you in your queries.
There is one more question. This client is asking, how do I know whether my coverage is enough or not? I think these clients probably refer to what is the exact amount that should the coverage be.
Okay, very much depending on, you know, the customer itself. Again, like what I've actually touched just now. Different people will have different 要求啦, like I said. So nowadays, a lot of medical cards from insurance companies has already given the benefit of like no annual limit, no lifetime limit or whatsoever. Hence, you can actually explore into such, you know, solutions for your question, rather than, you know, making yourself having only a fixed amount that you thought the coverage would be sufficient for yourself. Yep.
Okay. I think that's all from the questions, and also due to the essence of time, that was the last question, right? So Angela, is there anything else that you would like to add on before we end it?
Thanks everyone for your time tonight. So I hope each and every one of you can at least take some key takeaways for you guys to ponder about your real financial needs, be it during this pandemic era or be it during good days. I think each and every one of you must be responsible for whatever you have and be ready for whatever mishaps happen if it really happens. And we also do not want our loved ones to be suffering at the end of the day. Thanks, everyone.
I think like I said, due to the time restrictions, so we won't be able to address every single questions. I just noticed that there are a couple of questions that just came in the very last minute. So do not worry. All the clients, you may just share the questions that you have in your mind with our financial services consultant or the relationship managers, and then they can reach out to either Angela, myself, or some of our team member in head office. Then we'll just address it accordingly, and then we'll get your banker to get back to you as soon as possible, right? Before we end the webinar today, let me share with you some very important information. While you are doing your income protection or savings planning with Alliance Bank, please ensure that you check with your relationship manager or financial services consultants on many of our ongoing campaigns, as we are currently running a special fixed deposit promotion with 3 months fixed deposit rate of 9.88% per annum. Right, so just speak to the relationship manager or financial services consultant. Last but not least, we have earlier launched the cashback campaign, where you may enjoy 1 month premium cashback up to 1,688 ringgit Malaysia when you subscribe any of the eligible participating plans. Do check with the banker for more information before it is too late. Once again, and on behalf of Alliance Bank, we would like to thank you for your continuous support. We look forward to the next webinar or any such events soon in future to give you any sort of update. Thank you and stay safe.